I am speaking to you amidst extraordinary circumstances. Normally, when I address the media, we hold a regular press conference. But now, due to the need for social distancing and the precautionary steps which we are required to take, all of us, I decided to address the media. And since there is no press conference, I have tried to make my statement as explanatory as possible, as self-explanatory as possible, so that the room for questions, etc., are minimized considerably. So therefore, the statement is a bit long. I request your patience, and I would also request you to please be patient till the end, because towards the concluding paragraphs, I have tried to give some forward guidance. In view of the COVID-19 pandemic, the Monetary Policy Committee decided to advance its meeting, which was originally scheduled on 31st March and 3rd April, and the announcement was due to be made on 3rd April. We decided to announce it to 24th, 26th and 27th. Accordingly, the MPC met on 24th, 26th and 27th March and undertook a careful evaluation of the current and evolving macroeconomic and financial conditions, and of course the outlook. I wish to take this opportunity to express my sincere thanks to the MPC members for responding so quickly. I also wish to place on record my appreciation of all the staff and officers of RBI for their excellent cooperation in facilitating this. After extensive discussions, the MPC voted for a sizable reduction in the policy repo rate and for maintaining the accommodative stance of monetary policy as long as necessary to revive growth, mitigate the impact of COVID-19 while ensuring that inflation remains within the target. While there were some differences in the quantum of reduction, the MPC voted by a 4-2 majority, that is by a 4:2 majority, to reduce the policy repo rate by 75 basis points to 4.4%. I repeat, the rate cut decision is 75 basis points, and accordingly the repo rate stands reduced from 5.15% to 4.4%. Simultaneously, the fixed rate reverse repo rate, which sets the floor of the liquidity adjustment facility, that is the LAF corridor, was reduced by 90 basis points. I repeat, 90 basis points to 4%, thus creating an asymmetrical corridor. The purpose of this measure relating to reverse repo is to make it relatively unattractive for banks to passively deposit funds with the Reserve Bank, and instead to use these funds for on-lending to the productive sectors of the economy. It may be recalled that during the month of March so far, the banks have been parking close to rupees 3 lakh crore on a daily average basis under the reverse repo, even as the growth of bank credit has been steadily slowing down. This decision and the advancement of the MPC has been warranted by the disruptive force of the coronavirus. It is intended to, 1, mitigate the negative effects of the virus, 2, to revive growth, and above all, number 3, to preserve financial stability. We are living through an extraordinary and unprecedented situation. Everything hinges on the depth of the COVID-19 outbreak, its spread and its duration. Clearly, a war effort has to be mounted and is being mounted to combat the virus, involving both conventional and unconventional measures in a continuously battle-ready mode. Life in the time of COVID-19 has been one of unprecedented loss and isolation. Yet, it is worthwhile to remember that tough times never last. Only tough people and tough institutions do. In the recent period, Reserve Bank has been in action on a daily basis with efforts to alleviate financial stress, build confidence and keep the financial system sound and functioning. And we have taken a number of steps over the last 1 month or so since the conclusion of the last MPC meeting. In my statement, I have listed out the measures which have been taken. For the sake of time, I am not reading it out. Once the statement is uploaded, I think those who are interested can have a look at it. Let me assure that the Reserve Bank is at work and in mission mode, monitoring the evolving financial market and macroeconomic conditions and calibrating its operations to meet any need for additional liquidity support as well as to undertake other measures as may be warranted. It is our effort to ensure normal functioning of the markets, nurture the impulses of growth and preserve, I repeat, and preserve financial stability. Incidentally, we have in RBI quarantined 150 members of our staff and service providers together with the IT facilitators and the entire IT facility as a part of our business continuity plan. The plan was prepared and executed in a matter of days. The MPC noted that global economic activity has come to a near standstill as COVID-19 related lockdowns and social distancing are imposed across a widening swath of affected countries. Expectations of a shallow recovery in 2020 from 2019's decade low in global growth have been dashed. The outlook is now heavily contingent upon the intensity, spread and duration of the pandemic. There is a rising probability that large parts of the global economy will slip into recession. Turning to growth in India, the implied GDP growth of 4.7% in Q4 of 1920 in the second advance estimates of the National Statistics Office, which was released in February 2020, within the annual estimate of 5% for the year as a whole, is now at risk. As regards the outlook for 2021, apart from continuing resilience of agriculture and allied activities, most other sectors of the economy will be adversely impacted by the pandemic, depending upon, I repeat, its intensity, spread and duration. We have to recognize that the government has taken timely and appropriate measures to contain these three factors, that is to contain intensity, spread and duration. And let us all cooperate with the measures announced by the government to deal with the problem, to prevent the spread of coronavirus, to contain it and win this war. If COVID-19 is prolonged and supply chain disruptions get accentuated, now these are risk factors which I am listing out. It all depends how we respond to the situation. I am just listing out the risk factors. Only time will tell how effectively we have acted as a nation and how effectively we have been able to contain the spread of coronavirus and how effectively we have been able to restrict its adverse impact on our growth. So if COVID-19 is prolonged and the supply chain disruptions get accentuated, the global slowdown could deepen with adverse implications for India. The slump in international crude prices could, however, provide some relief in the form of terms of trade gains. Downside risks to growth arise from the spread of COVID-19 and prolonged lockdowns. Upside growth impulses are expected to emanate from monetary, fiscal and other policy measures and the early containment of COVID-19. As regards inflation, the prints of January and February 2020 indicate that actual outcomes for the quarter are running 30 basis points above our earlier projections, reflecting the onion price shock. Looking ahead, food prices may soften even further under the beneficial effects of the record food grain and horticulture production, at least till the onset of the usual summer uptake. Furthermore, the collapse in the crude prices could work towards easing both fuel and core inflation pressures depending on the level of pass-through to the retail prices. As a consequence of COVID-19, aggregate demand may weaken and ease core inflation further. Heightened volatility in financial markets could also have a bearing on inflation. Given this heightened volatility, unprecedented
यहाँ पर
uncertainty,
आप आरबीआई के गवर्नर को सुन रहे थे जो साफ तौर पर बता रहे थे कि वक्त बताएगा कि कितना इफेक्टिवली हमने इस समस्या कोरोना वायरस का वो जिक्र कर रहे थे कि सामना किया। यहाँ पर बड़ी बात यह है कि रेपो रेट में एक बड़ी कटौती हुई है, 75 बेसिस पॉइंट की यहाँ पर कटौती की गई है। नई दर जो है 4.4 है।